Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as stockcharts.com. So the one thing I wanted to cover off today is copper and copper related trades like the explorers that mine for copper. I think we have a big opportunity setting up in 2022, and I've tried to cover it off in different ways. But today, a lot of the charts actually broke out on Tuesday. I'm recording this Tuesday night for Wednesday. And so there's a lot of reasons to go in and look here. So commodities continue to run. Copper, metal, and oil names all seem to be working right now, and so it's a pretty exciting place to cover. If you'd like to know more, you can always head over to gregschnell.com and check out our membership. We have an annual membership there at $860, and if you're interested, I'd be pleased to have you as a client. We do handle a lot of people with large wealth portfolios and just try to keep them on the right side of the weekly charts. Nowhere near a day trading site, but definitely one trying to help you find bigger positions. So I want to jump over and specifically talk about the run we've had on the S&P 500. And one of the things that we can look at is this concept of what I call late stage bases. So we had the original run off the 2020 low, and we ran up, we made a high, we pulled back, and see how we broke out, and then we pulled back under, and then we took off again on our next run. And on the next one here, we wobbled a little bit, then we ran up again, we pulled back again. I could have moved this line up a little higher, but again, we retested our breakout level. Looking on towards the February, March, this is kind of the end of the SPAC move. And what we saw there was a stock market run up, almost a mania in terms of volume on the Nasdaq composite stocks. So we broke out, we pulled back again, checking our work, and then drove up to a new high. Tried to break out here, pulled back, tried to break out again, pulled back, and check our work again. And then we ran up and made another big move. The most recent pullback in September, we stayed down there for almost 2 months, and then we ran up again. We did a little bit of a pullback, but we actually just got to the line not underneath it. So that brings us to today, and what we have now is we've had the S&P 500 breakout above the 4,700 level, got all the way up to 4,800, has pulled back, dipped down just kind of below what we would like to call support, and now looks like it's ready to cook and fire again. So that's what we're watching for to see how that's going to behave. Now, when we go look at the Nasdaq 100, this is just a 60-minute chart going back to the 21st of December, and you can just see the smooth rollover, and now we're rallying up. And the real question is, how much momentum do we have? Do we have enough momentum to kind of push up and out of here? This chart is a little bit... There's some really interesting traits going on the NASDAQ, and one of the things I want to just take a few minutes and point out was that during the previous market, what we see here, I'll just grab a box, and so this was a Monday, and the market ran up, and then literally it looked like everything was going to be great that week, and then worked its way lower, and then on the following Monday, we basically just jogged sideways, but it ended up being a reversal day. We went all the way up. Then on the following Monday, we started to work our way back down again. Thursday, we had a test, and then we kept falling. The following Monday, everything looked horrible. We fell down and started to make new lows, and then we took off to the upside again. Then we got to the Monday, everything looked great, and sure enough, that marked the top. And then to start January 2022, we turned around, broke, and it looked like we were going to break out to new all-time highs. No, that was just a another reversal day. And then we've also started it this week where we've had a big downtrend, and now that looks to be a reversal day. So the main point I wanted to make was this. It seems like on Monday we're making all of these reversals. So we end up making a top and then making a bottom, from the bottom going back to the top. On Monday, it's our reversal day. Monday, it's our reversal day. Here we stopped going up and trickled lower all week. Monday, it looked like this was going to be our reversal day higher, but we ended up falling down quite precipitously through that week and took out the lows. And now we're trying to move higher again here. So just watch these Mondays. It seems like there's a lot of reversals. So let's say we get back up here into the 16.2, 16.3 range. I just want to watch and see how we behave early next week to see if we can actually get through this sideways range. We've been in it since mid-November. Anyway, not to make a big deal out of it, it's really odd because you come off the weekend and you're kind of, okay, what's the market going to tell us this week? And you're getting all set up, and it's either a big bullish day or a big bearish day, and you're kind of going, wow, this is going to be hard this week. And then the market turns and gives you a chance. So just try to keep that in mind. It seems to be a real differentiator so far over the last 8 or 9 weeks. So this is my strength index, and it had started to weaken last week as the market was pulling down. And on Tuesday here, it's actually starting to spike back up, and this one is my slower indicator. I've got some faster ones, but the main concern I have is they've all dropped back below 50%. So I want to have my stops nice and tight and make sure that the market's able to keep rallying from here. And if all of a sudden all my stops get taken out, I probably want to leave the party. So anyway, that's kind of the way I'm looking at it. Now, I mentioned off the top that I want to talk about commodities. And the main reason that I think it's so important to talk about it, I just know so many people like to cover the tech names and work through those. But we're having a gigantic setup in the commodities. We've got a couple of things that are starting to be a tailwind for us. And one of the other most important things fired off this week. So this is the copper miners compared to the technology index or the technology ETF. And what you see here on this chart was commodities, the copper commodity companies were going much, much higher. And on May 10th, they topped and started to work their way lower. And then as they broke through this upsloping trend line, they've been kind of underperforming tech ever since. Well, what we're seeing is late last week and the start of this week, copper miners are actually starting to outperform technology. Our momentum indicator's gone back to positive, and we've broken this big downsloping trend line. Now, that doesn't automatically mean we get to break out, but it sure looks good here with some of the miners breaking out. So I'm going to show you some of the other charts that I'm seeing that make me think we've got more than just a one-day trade here. But you will see that the 200-day moving average of this ratio has rolled down, so we always have to kind of respect that when it's when we're breaking this downsloping trend line and you're below kind of the long-term average, we could end up just getting chopped up down here and continue to make lower lows, but maybe not at the same rate we were. Anyway, a relative strength chart compares one thing to another, in this case copper miners versus technology stocks, and we're starting to break the downtrend. And it was a pretty good clue when we broke the uptrend here that something different was going on. So now we have the opposite situation. And if we're going to see these copper miners follow through, these things move fast. They move really fast. And so if you think technology stocks can move fast, well, imagine how fast the techs or the copper names had to move from October to May or June of 2021 to be able to outperform tech through that whole period. That was a pretty big move. Anyway, if that's the opportunity setting up right now, I think it's a pretty important place to be aware of the trend change. So with that, So for this segment, we kind of started off in the indexes, talking a little bit about the difference between really two sectors here, the XLK and the materials sector, but I've specifically gone into copper miners in my newsletter to clients and whatever. I'm covering off a whole bunch of different types of areas that are setting up as well, but this is one that is really starting to work, and I just think it can give you an idea of some things to look at, and we can go into there. So what does a copper stock look like typically right now? Well, one of the things we're starting to see is a lot of them have made bases and they're starting to break out to the upside. So here's Amerigo, and it's breaking out. Taseko Mines hasn't quite got the breakout going here, but we have kind of a cup with a handle and it looks like it's ready to take off. Freeport-McMoRan is one of the biggest names in the space, and it's kind of got a 6-month base here, and you can see it's starting to work its way higher. And over here in the Zoom panel, you can see on Tuesday of last week, it broke out and made new highs, pulled back, came in for a couple of days, and now actually had its highest close on the chart. So really a nice breakout to start the year. And again, this is one of kind of the big guns in the area. So we're looking at a lot of charts that have been in sideways bases, and they're just starting to break out the right side. So it's one of the reasons I think it's important timing to bring this to you. Capstone Mining had a little horizontal area, briefly broke out, pulled back, and now it's going back above that area again. So I kind of like this second restart. That's the reason I want to cover this off. Again, the charts are all set up nicely. So let's go look at some of the bigger pictures in commodities here and see if you agree with what I'm seeing. So first of all, this is the Commodities Index, the overall index, and there's 19 different commodities that make up this index. But what we see is a big downtrend that was going on really from 2011. It went back a little bit more than that to 2008, but that was really the oil high. Most of the commodity stocks like copper and steel and that kind of thing started to break down in 2011, 2012, and they've been downtrending. Well, we've broken out of that downtrend. So we broke out of a 6-year downtrend back here, but now we're breaking out of the much larger trend. And this is a monthly chart, but you can see we're pushing up to new highs right now after kind of a 3-month pause. And the US dollar is up against a pretty big resistance level here, so we'll see if it's got any more horsepower to the upside. But this commodity chart looks to me like commodities are going to continue to move higher, and it's one reason I want to be in the space. That was a monthly chart. This is a weekly chart of the same sort of information, but again, we had a big giant uptrend, a couple of weeks of a pullback here, 4 or 5 weeks. And now it looks like we've just kind of consolidated and we're ready to move higher. And at this point, we're breaking out to new multi-year highs. So pretty nice place on the chart. And if we're just getting in front of it as these copper miners are starting to break out of their bases, I think it's a pretty interesting time to be aware. When we look at the commodity tracking ETF, and this is general for commodities, so this includes oil and gasoline, natural gas, some ag commodities in there, a whole bunch of stuff. Anyway, this is starting to break this downtrend and getting ready to pop up. It closed at 21.56 and 21.85 is the prior high. So we're at the second highest, so we're above this one and above this one. Another day like Tuesday, and this thing will probably push all the way through to new highs, so that's pretty important. Now here's West Texas crude, and what we see here is it's breaking out above its 10-week moving average and starting to take off. Natural gas, after a furious rally, is starting to turn back higher again, and I think we all know the cold temperatures in North America can help the natural gas chart, so I don't want to place too much emphasis on that, but crude, gasoline, and distillate or heating oil, otherwise called diesel fuel, all starting to push up. It wouldn't take much for diesel fuel to get through last fall's kind of highest level up around 256. That's a weekly close. And then We're very close now. We're sitting right at that level. So we've got 3 days left to trade on this week, so we can't use this as a definitive endpoint here, but we're definitely putting pressure on prior highs. We've got a big uptrend. We're back above the 10-week. This looks pretty good. So after breaking out to new highs, we pull back, we kind of test our support level, it holds, and we take off to the next layer. That is as good technically as we can get, and it's kind of what I mentioned on the first chart with the S&P 500. You build these consolidation zones, and then you kind of break out, come back, test, and then turn higher again. This is on a much bigger scale. We're talking about 7-year highs. As the chart's starting to break out, this is pretty bullish. Gasoline, same thing. We have a lot of interest around this 220 level, and in October, November, we came down and tested this horizontal support resistance area a couple of times now, and then fired back up to the highs. And again, we're on our way going back up to test this October top level here. Not going to get into the corn area of the market. It's just a different conversation. But gold is another metal trying to go higher, and it really hasn't done anything, right? It's been much more stable, going sideways compared to the big up ramp we had in the copper names in 2020 and 2021. And silver, again, just kind of hovering sideways. But as we work through this is the chart for copper, the actual metal. And we had a prior high way back on the left side of the chart, and I can show it to you in a second here, at about 458, and we rallied through it. And you can see we've been hovering right in here, 420 to 480. So that 450, 458 levels kind of right in the middle. I think if we can break back through the 458, which was the prior high, that's going to be a big deal. And that will probably, after this long consolidation, we start to break out. What we've been waiting for is watching to see if this copper momentum, PPO momentum indicator can turn up well above zero. That's a pretty important thing. Typically what will happen on your PPO is when you're in a bear market, it kind of just barely gets back to zero and then falls down again. When you're in a bull market, it starts to bounce off the zero line and continue higher. So if we just widen out this chart, going back a while, you can see it went for a whole period here of multiple, let's say 4 or 5 years, where the PPO couldn't even get back above zero or just around it. And then it spent a year and a half with it up above zero, and then pulled down, spent time down below it. So just a simple thing here, if we can bounce right here around zero and start to turn back higher, this is a pretty bullish place to look at the chart. Here's our prior high at 458. So you can see if we can get through here, this gets pretty exciting. This is a consolidation pattern right up at the prior high, and any sort of breakout to the upside I think is important. We'll just work our way down here. Lithium and rare earth metals are also actively involved in the electrification, or the improvement in the electrification of cars, moving to a more important structure with the grid. If I have any question about what's going on, one of the bigger issues we've got is that we don't seem to be putting pressure on the utility companies to maintain any sort of spare capacity, which continues to make the situation very, very tight. And so we're getting these power bumps where Europe was around 50 euros per megawatt, and now during the surges they were paying 200-300 euros per megawatt instead. And so it's this change in structure that we're going through, and I don't really think we're putting enough pressure on the utility companies to maintain a margin of safety below their highest utilization rate. So each year we end up having periods of time where the grid can't handle it. Well, what that means is if we're going to go to wind and solar, which are not what we call base level power construction, they're only supplying power when their conditions are optimal, not 24/7 like a nuclear or a coal plant. So we'll need batteries to store it, and that's why the rare earth metals and the lithium charts are pretty important. Now, rare earth metals, you can see the rate of advance on this was a lot steeper. So in 2021, lithium moved from here to here. It was still a pretty good move, but it was, I'll call it, relatively muted compared to the move that we saw in the rare earth metals. I still think we're in that same sort of environment where we're going to need a lot of this stuff. Tesla just signed a deal. I think it was for nickel supply. So you've got all of these companies trying to get position to guarantee their supply from certain mine sites and that kind of thing. Copper, lithium, rare earth metals, and even steel. All of these are important. So if we go look at the Goldman Sachs Industrial Metals Index, this is starting to break out to prior highs here. And you can see the consolidation pattern on this one is actually starting to break through. So we're going back to the 2007 highs, the 2011 highs, any sort of breakout here. And I think we're in for a meaningful surge on all of these metal names. Okay, lastly, I just wanted to cover off the actual copper charts themselves on a bit of a different time frame. So this is the big picture on copper. And we can kind of see the same patterns building currently that had built before. And from that level there, we went from 180 all the way up to, call it 386. And this was about a 1.5 year period where copper literally soared. And you can imagine how important that would be for the copper miners. So this is a pretty big level here. We've been watching this base just kind of build sideways, and copper actually hasn't started to move, but the copper miners are. And we're just inches away here from getting this copper to give us a positive PPO cross for the first time since it broke down in May. So that's one of the things we're watching for. Lastly, the copper miners themselves. This chart's up 258, but lots of the copper miners I was looking at were up 3, 4, 5, and 6% today. So pretty heady moves. And what we're watching for, again, is a breakout of this big base, and they should be able to move higher. Okay, so just to go back to some of these copper names, I've covered off some of these at the top, so I'll just scroll down. But you have this Ivanhoe Mines just literally launching since the beginning of the year. This thing's up 10% in a few days. Sierra Metals, this is down and out, not very good. Lundin Mining is a nice name, actually. It's you can see a big downtrend here, but really for the last 6 months, it's been sideways consolidation. A break above $11 would look pretty good. Some of these other names still look pretty beaten down. They don't look nearly as good as the Freeport McMoran charter charts like that. Here's Taseko, the US listing. The other one was the Canadian side, but you can see this cup, kind of a handle building, and it looks like it wants to start to try and push higher. Critical Elements, this is a rare earth metals chart, and it wants to start to turn higher. Nevada Copper, you got a big downtrend line here just starting to break, so that looks a little bit better as well. And just go on to the next page here. Let me just zoom in. But what we want to see on these charts is we want to watch them start to make their bases and break out to the upside. And if we can get that sort of price dynamic working, I think we're in a good place to start looking at it. So when you see these charts aligned to start breaking down trends, it's a pretty nice level. Again, our PPO, this is a daily chart, but if it could start to turn higher, that would get us very interested. When we just go back and look at the front of this, here's this Freeport chart, and we can just click on that. Let me just shrink that down here. So what we see on this Freeport chart, you can see the PPO momentum has waned since earlier in the spring, and then bottoming in September, and it's been working its way higher from $30 to $43. We're just sitting here trying to test this breakout on $46. So as these miners start to pop, I think there's some pretty meaningful upside. The scooter ranking is now moved back into that positive area, and it's that sort of thing that I think starts to deliver results as everybody starts to see these charts relatively outperform. Southern Copper is similar to Freeport-McMoRan, and you've got a nice big base building in here below $65, and any sort of a move above here could probably make this rocket to the upside. We've already got a PPO cross, and it's hanging in around this zero level, and it looks like it wants to shoot higher. So again, it's still early. We haven't made big moves, but we're just getting back above our 40-week moving averages, breaking out of bases, and I think it's a pretty exceptional time to go look at that. If you like this type of thing, feel free to head over to gregschnell.com. I wrote an article on there recently, and also on StockCharts.com under the articles tab. You can go there, and under the most recent article was about copper, and so feel free to jump in there. I think there's lots for us. Hopefully it gives us a nice run for the first half of the year at least. Thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays at 10:30 a.m. Eastern. You can also see the recording on StockCharts TV on demand and StockCharts TV YouTube page. Thanks, everybody. Have a great week. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.